Hello, traders. Gary Wagner here. It is 12:08 in Honolulu, 5:08 in New York on Tuesday, 20th day of December, 2022, and this is the Daily Report for gold and silver. In a surprise announcement, the Bank of Japan today raised its benchmark interest rate on the 10-year government bonds from near zero to cap it at 0.5% rather than 0.25%. That sent shockwaves and ripples through the financial markets globally. It took the dollar dramatically lower, and as a result, it moved gold higher, which was the combination of dollar weakness as well as a safe haven play. Currently, we have gold futures basis the most active February contract up $30, fixed at $1,827.70. That is a percentage gain of about 1.7%, but the largest mover today absolutely was silver. Silver is currently up 5.16%. That's a net gain of about $1.20. Taking the most active March contract to $24.40. Lastly, you can see that the dollar did contribute to gains across the board in precious metals, with the dollar giving up approximately 0.71%, currently fixed at 103.595. Gold had a dynamic upside surge today, gaining $30. What is noteworthy is the fact that it opened just above the 200-day moving average, and it traded to a high this morning of 1832, but more importantly, the close that is currently at 1825 matches the close that occurred last week. Based on our technical studies, we look at our current support levels starting at the 200-day moving average, 1795, with major support now moving to approximately 1785. I am not so convinced that the old major support that we had labeled at 1750, which is Fibonacci based, is still in play. Effectively, after breaking above this former high at 1785, and that makes the case for a consolidation and then a move higher. A higher move would be confirmed on a significant break above that on a closing basis. Unquestionably, today's gain was a combination of market participants bidding gold, silver, platinum, and palladium higher, as well as dollar weakness. We are looking at the dollar chart right now, seeing that the dollar index lost approximately 0.7%. When we look at that and compare that to gold gaining about 1.7%, silver gaining in excess of 5%, we can see that the predominant factor for metals rising today was market participants bidding them higher. We can also look at the Kitco Gold Index, with spot gold currently at $1,818.40, of which $11.30 is the result of dollar weakness and $19.60 the result of normal trading. In other words, trading accounted for 2/3 of today's gains. In terms of gains in the precious metal, by far silver exceeded platinum, palladium, and gold with a gain of well over 5%. Silver gained 5.5% and is currently fixed at $24.38.5 per ounce. What is noteworthy when we look at our daily silver chart is that we did do a basic Fibonacci extension. We measured what we're labeling as a wave 1. We started at the conclusion of the correction, or wave 2, and we plotted the potential for wave 3 to go to a 1.618% extension of wave 1. That is exactly what we saw occur last week. This candle occurred at the same time that we saw the large spike in gold prices challenging the high. And today we had a higher close, unlike gold that had an equal close, and it closed exactly at the 1.618% fib extension. The question is, will silver take that out? If it does, we want to calculate where in fact it could go. It didn't really have any kind of correction per se, but neither did gold. It did decline slightly, trading just below the 23.6% Fibonacci retracement. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.